Welcome to the Video CPA. Good to be with you again. I'm Michael Scott. I am the Video CPA. I'm CPA with now 46 years of income tax experience and accounting experience. Today we're going to talk about educated-related tax credits for 2020. There's two of them left in 2020, and you need to be aware of when you can use each. So let's go ahead and get started. We're going to talk about our affiliate marketing disclaimer first of all, and just says that if you buy something from a link on this channel, we get money. Okay, and then the educational disclaimer, you can read that. You're probably familiar with it, so if you've watched these videos. So in 2020, there's two credits available. First, the American Opportunity Tax Credit, and second, the Lifetime Learning Credit. All right, both of those are available. Now you notice there's a note down at the bottom that says the tuition and fees deduction is also still available in 2020. But that's a deduction, it's not a credit, and there is a difference. So we're not going to talk about the tuition and fees deduction today. We're going to talk about the two tax credits that are available. So with that in mind, let's go ahead and talk about what the rules are for both of the credits. And there are some particular rules that satisfy both of them, and then we'll go into additional rules for each of the two credits, specific rules. Okay. So what are the rules? First of all, you've got to be claiming this guy as a dependent. So it's got to be you or your wife or child or something, or third party that you can claim as a dependent. All right. Second is that they have to pay educational expenses, qualified educational expenses. They have to pay it to an eligible education institution. So the student has to be enrolled in a eligible institution, educational institution. And then finally, as I said before, it's got to be the taxpayer, the spouse, or a dependent listed on the tax return. So those three are requirements for both the American Opportunity Credit and the Lifetime Learning Credit. All right, so let's go in and look at each credit specifically because they will have additional requirements. So first of all, we're going to look at the American Opportunity Credit, okay? And the American Opportunity Tax Credit basically says that, okay, it's got to be a recognized educational credential that you're going for. So you got to be going after a degree, or if you're in trade school, you got to be going after some kind of credential. But it's got to be a recognized educational credential, okay? And then you've got to be enrolled at least half-time in the educational institution for one academic period. This credit is for the first 4 years of your college. So if you're a graduate student, you're not going to be able to get this credit. It's for the first 4 years of higher education. And if you've claimed the American Opportunity Credit or the HOPE credit, which used to be around, for more than 4 years, you're not going to be able to get the credit. It's for 4 years. And then in addition to that, the student must not have a felony drug conviction. And so if you have a felony drug conviction, you're simply not going to be able to get the credit, all right? So those are the requirements for the American Opportunity Credit. It's got to be a recognized credential. You got to be half-time, enrolled half-time. It's got to be during your first 4 years of higher education, and you can't have claimed it for more than 4 years, and then you can't have the felony drug conviction. Okay. The credit amount in this case is $2,500 per student, and you can use it for as many students as you have. So if you've got 3 students, you can take more, basically. But $2,500 per student is the maximum. All right. Now, the interesting thing about this credit is that 40% of that is refundable. So if you owe no taxes at all, you can still get a refund of 40% of the credit. And so that's important because that's not the same with the Lifetime Learning Credit. But so that's one advantage of the American Opportunity Credit over the Lifetime Learning Credit. Now, the credit is calculated by taking 100% of the first $2,000 and then 25% of the next $2,000. So if you've got $4,000 worth of qualified educational expenses, you max out the credit at $2,500 per student. All right, and with tuition rates the way they are today, $4,000 is pretty small, actually, for a student to go to college for a year. So that's pretty easy to obtain. Now let's look at the qualified expenses and what's meant by qualified expenses. And basically we're talking about tuition and fees related to enrolling and attending college. Not a lot is going to be allowed other than that. They do say now that under the AOTC that books, supplies, and equipment needed for the course of study is allowed. And these don't have to be paid to the financial institution necessarily. So if you need it for the course of study, then you can include these in your qualified expenses. Things that do not qualify are room and board, insurance, medical expense, transportation, personal living expenses. So those are things that if you're thinking about those type of things, those aren't going to qualify for the qualified educational expense requirement. All right. Now also in here you've got an income requirement, and this is on modified adjusted gross income. And so this credit actually phases out for individual filers. It phases out between $80,000 and $90,000 per year. For married filing jointly, it's $160,000 and $180,000. So if you're over $90,000 as a single individual or $180,000 as a married individual, you're not going to get a credit. All right. If you're over the $80,000 or $160,000 for married or for single or married, respectively, you will get a credit, but it's going to not be the maximum credit. Okay, and that, of course, depends on what qualified expenses you've got too. If you don't have $4,000 worth of qualified expenses for a given student, you won't get the maximum anyway. But that's where they phase out, and so. If your income is over that, don't even bother. Don't even think about it. All right, let's look at the lifetime learning credit then. Lifetime learning credit's much easier to get. Okay, you don't have to be in a degree-seeking program. You can just be taking one course, for example, and get the lifetime learning credit. Does not require you to be enrolled half-time or part-time. Okay. And, well, half-time, and you can be enrolled part-time. You can be enrolled in one class, for that matter. The credit can be claimed for an indifferent number of years. So you can, as long as you're going to school and taking courses, you can claim the credit indefinitely. And the student is, you're not going to be disqualified if you have that felony drug conviction. So the lifetime learning credit is usually going to be a smaller credit than the AOTC, but it is a good opportunity to take a credit if you're going to school and if you've gone to school for quite a while. Or if you decide to go back to school and just take a few classes. So let's go ahead and look at that in more detail. The credit amount is $2,000 per year per student. No portion of this credit is refundable, so that is the downside of the lifetime learning credit versus the American Opportunity Credit. Not refundable, and the credit is calculated by taking 20% of qualified expenses up to $10,000. So if you have $10,000 for a student in qualified expenses, which again is pretty easy to do with tuition rates the way they are now, you'll get a $2,000 credit. Now there are also some phase-outs on this, and we have to talk about qualified expenses. So qualified expenses now are just about the same as the American Opportunity Credit, and you can see that the non-qualifying expenses are the same. One of the differences is if you have books or supplies, you've got to have paid those to the educational institution. Whereas with American Opportunity Credit, it doesn't matter. Now, you'd think that the IRS would get these two credits kind of straightened out so they were about the same as far as requirements go. I mean, it doesn't make sense that you have to pay it to the educational institution in one case, but you don't have to pay it in the other case. And then if you look at the gross income requirements for the modified adjusted gross income, they're different as well. And I don't understand that. I mean, you would think that these things could be consistent between the two credits. So instead of $80,000 for individual filers, it's only $59,000, and the phase out is $69,000 instead of $90,000. Instead of $160,000 for married filing jointly, it's $118,000, and the phase out is $138,000. So why this is, I don't know. But of the two credits, if you can take the American Opportunity Credit tax credit, take it first. I mean, it's going to give you the highest credit. But if those first 4 years are used up and you still want to take a credit, the lifetime learning credit is there, and it's a very good alternative. So let's go ahead and look at the impact of scholarships and grants. You know, you will get from the educational institution what's called a 1098-T, and it's basically a report that shows you how much you've paid to the educational institution for the year. It will also show whether you've received any grants or scholarships. If you have received grants or scholarships, they're going to show up on that form, and you're going to have to subtract them from your qualified educational expenses. And it's possible that your grants or scholarships may exceed the cost of going to school in some situations, or what the educational facility lists as the total amount of money that you paid them. If that's the case, you've got taxable income that you're going to have to claim. But in most cases, it's not going to exceed it, but you're still going to have to subtract it from your qualified educational expenses. And so if you thought you had $10,000 and you got grants for $6,000, you've only got $4,000 that you're going to apply the calculation to. And so if you get a 1098-T and you fail to do that, you're going to get a letter from the IRS, okay, an audit letter. All right, let's look at how you claim the credit. Again, you've got to have this 1098-T in order to claim the credit. There are exceptions to that. If the education facility or institution did not issue a 1098-T, you first need to go after them and try to get one. But if they didn't, then you can still take the credit. You just have to be able to support what your expenses are. Or if the educational facility was not required to issue a 1098-T, there's an exception there as well. If the Form 1098-T is incorrect and you know it's incorrect, you've got to go to the educational institution and see if you can straighten that out so that they will issue a new 1098-T. The IRS does not want to get involved in this, so don't complain to the IRS that the form is wrong. Make sure that you get a new form issued by the educational institution. If you decide that the form is wrong and you don't get a new one issued, you need to understand that these forms go to the IRS, and so the IRS is going to compare what you've got on your tax return to the 1098-T that was sent in by the educational institution, and if there's a difference there, they're going to question you. So you need to make sure that you get the new 1098-T, the corrected 1098-T issued. Now, the actual credit is claimed on Form 8863, which is education credits, and in this case for 2020, it's for the American Opportunity Tax Credit and the Lifetime Learning Credit. Those are the only two available in 2020. So Thanks for watching. Hopefully that will familiarize you a little bit more with the 2 tax credits that we have available right now. And if you need more information, put it in the give me a comment, and I'll reply to you and try to answer your question. Other than that, if you haven't subscribed, do so, and like the video if you truly did like the video. Good to be with you, and thank you for watching.